Okay, so we're live. Today is January 3rd, Friday. Now, technically, first trading week of 2020. I hope everyone had a great New Year celebration. And now it's just crazy, right? It's 2020. This is probably my 14th year of trading. Now, obviously, when I say trading, I mean, like when I entered the market completely from the very beginning, which is back in 2006. That was a long story, but it was such a long journey now thinking about it. Gosh, time really flies. So 2020, I hope everyone have had a great New Year celebration, and now many of you are still celebrating the New Year. Totally fine, totally understandable, because technically, first week of the market, it's nothing really going on. And let me show you the calendar, so you can see that most global banks are still in holiday mode. Like nobody's really working in the first week, including myself. I didn't really trade. I was still still looking at the market, looking at the news just because I like it, but I didn't really trade myself. And you can see we still have some financial data, but the liquidity, generally speaking, is still very very thin. And a lot of time like this, people will forget that when the liquidity is thin or when the economic data is very light, what's gonna drive the market will be the news, will be the story. So today, actually, from last night, we had a very big tier one news, which is, first of all, today the oil actually went up 3%. And since Japanese yen, Swiss franc, everything went up in the safe haven. Gold also jumped. Let me show you the chart. See if I have it here. Oh, I don't. Sorry about it. Just give me 1 second. Let me open up the commodity chart for you. Right here. 4 charts commodity. So today, all the safe haven actually jump up. The U.S. bond yield, the U.S. bond yield dropped, and the oil went up, gold went up, Japanese yen, Swiss franc, all went up. So in this kind of census, like if you see a simultaneous safe haven inflow, most likely, and if you look at the calendar, you see, hey, there aren't any economic news. Then most likely there are some big global news. And basically, what happened is that U.S. had struck and killed one of the major general in Iran. So right now, Iran is vowed to retaliate, and these things caused a little bit panic into the global market. People thinking that the tension between US and Iran escalated. I mean, thinking about it crazy. We just on the January 3rd, 2020. This is how we start a new year with a potential war. So it's really a not really a good time right now. It's a lot of hostility in the global market, basically. So that's what happened. This thing, on top of that, today is Friday. So a lot of people decide to park the money into a safe haven currency, which is the one I just mentioned, gold, U.S. bond, and oil price went up because of the war, the potential escalation between Iran and U.S. That people think, hey, the oil we might have a shortage of oil. So that's what happened. Basically, the major news today, and it's definitely exciting to start a new year with something like this happening. But of course, like I say, it's not really something so positive for the world. So that's the major news for today, and that's what happened to a lot of currency. They just react that way. If you take a look, for example, like Japan, like Euro Yen, you see a big drop for Euro Yen. You see a big drop for pound, for cable as well, for pound yen. So all these things, it reacts simultaneously in the same way You see a big drop in euro dollar. Now, a lot of people forget that when like US dollar has a very interesting position, because when the economy is good, and of course it depends on the situation, but when the economy is good and the central bank, the Federal Reserve, keep raising interest rate, people want to buy dollar, right? Because dollar is more worthwhile, have a higher interest. When the US equity is good, people also want to buy US dollar in order to buy the US stocks. But when we have a global event like this, when we have a war, let's just say, God forbid, we have like a third world war, what's gonna happen? People are gonna park their money in the US dollar, because dollar is as good as gold. Okay, this is still a rule of thumb, and whether you like US or not, the US dollar is still a global currency. Anywhere you go, if you travel all around the world, you'll know that dollar is as good as gold. So that's why when this kind of event happen, we will see an inflow into the US dollar. And that's why we see euro dollar drop today. So that's another inflow. You see, look at New Zealand Swiss, we see a New Zealand dollar drop, not because anything fundamentally bad happened in New Zealand, it's just because a strong inflow into Swiss franc. Swiss franc, many of you know, Switzerland has been a neutral country since World War II, World War One. So that's basically just a small, education, understanding of how the asset class works in a different geopolitical situation. Now, since we don't have much news going on in the first week, I find it's pretty good to just do a quick recap of what happened in 2019. Just look at the chart. If you look online right now, you'll see a lot of people trying to make prediction for 2020. And I never done those kind of predictions, because I find that a lot of people love to be right. They love to make predictions, and they love to be right. Now, for me, the only goal for me in a financial market is not being right. I don't care about being right or wrong. I don't even care if I have any original idea. Right? This is not art. This is not something creative. The only goal, or the only reason, the outcome for us to trade in a financial market is to make money. It's as simple as that. So it's fine if you don't know what's going to happen in 2020. I don't know what's going to happen. It's okay if you don't have any original ideas. And it's certainly okay if you're wrong. Do not marry to your ideas. This is something very, very important, because a lot of people like to go to the financial market and they make certain prediction, and then maybe a couple months later they are wrong. But because they were so convict and committed to their idea, that they are in a sort of denial. They don't want to admit it that they were wrong, and they rather marry the idea. They rather save the face and let people know that, no, you know what, the market is going to turn back to what I predicted. And they end up losing money. And I certainly guilty as that, because I used to do that myself. I used to go on forum, make some predictions, and I argue with people. In the end of the day, I lose money. So what is the point, right? So nowadays, I never done that. I go to different forums. I absorb all different kinds of ideas. I never judge or doubt or think any idea is stupid, because you never know. The truth is that no matter how smart a person is, a lot of time you go to banks, you go to those financial seminars, and you see people like to show their degrees. They're from Harvard Business School. They have CPA. They have a lot of things, but nobody knows the future. It's as simple as that. So if you have this kind of concept into trading or investing, you will be able to change. You will be able to adapt. And that's the key to make money in the financial market. Remember, we're here with one reason only, is to make money. We are not here just to be right. Okay, this is not an academic place, at least for me. I trade just because I want to trade for profit. All right. So I did a little bit of this. I remember last videos, or the video before that, just talk about the general market condition. Now, obviously, we had a very good 2019. If you have invested in the S&P or any stock market, you'll make a double digit for sure. You make 20%, 28%. I think Apple had returned almost like 80 or 85%, things like that. So people start to know like what's going to happen in 2020. Well, one thing for sure, because we don't know what's going to happen, but we know what event is important enough to completely switch the financial market. Now, first thing, of course, is the US election. Now, a lot of people don't know the impact of US election. People don't like to talk about politics. They think it's a joke. They probably don't like the current president. Doesn't matter. Okay, what happened? Why do we need to care about U.S. election? It's because U.S. still is the strongest economy in the world. And look at the current situation between U.S. and China. The trade war situation had been the main player, the main theme throughout 2019. So of course, the U.S. election is going to affect the financial market. It's going to affect the U.S. trade and diplomatic strategy. Hence, it's going to affect the global economy. So my prediction is that we're going to have a big shift after November. But that also means because of this ticking bomb, I think a lot of people or big institutional traders might keep the status quo before the November election. Meaning that yes, they can try to make a bold prediction of who is going to win, and then switch their financial asset. But it's very risky for those kind of institutional trader, because if they do that, if they say, "Hey, I think Donald Trump is going to lose, so let me place a certain financial asset," and at the end, if Donald Trump wins again, they are going to lose a lot of making money opportunity for their client. And not only that, they're gonna look like a very foolish person to make this kind of bold prediction. And because what had happened in 2016, where all the census had been completely wrong, so nowadays people don't like to make this kind of prediction. So I think, generally speaking, a lot of traders is going to not making too much drastic change. People are going to ride the current trend all the way up until the election. But that also means if we really have a big shift in the US election and followed by a big shift in a policy or the parliament and everything change, that will definitely affect the financial market. Okay, so you can ride the current trend. Generally speaking, I think it's still gonna go up, but after November, nobody knows. Okay, whatever you can do, of course you can exit all your trade before November, but we never know what's going to happen, right? So this is something very tricky to trade through. So I think 2020 will be a very tricky year to trade, especially in the last quarter. Okay, so obviously look at all the equity market: New York Stock Exchange, S&P, NASDAQ, Dow Jones, everything went up in 2019. If you look at the US bond yield dropped drop in 2019. At the beginning of 2019, it slowly climbed up. So not much happened in the bond market, but we can see that people were buying the US bond at the beginning, and now it dropped. So now we're stuck in this zone. The bond yield also has a lot to do with Federal Reserve. Right now, almost all the major central banks from US all the way to UK, Australia, New Zealand, nobody is looking to raise interest rate. Basically, what does that mean is that all the banks, all the countries trying to keep their money as cheap as possible. And as you all know, that this is really the 10th or 15th year of a bull market since the financial crisis, basically. So people are thinking that maybe this is the end. But like I mentioned in the previous video, nobody won't be the person to stop the party, be the party pooper. So all the banks are trying to keep the money as cheap as possible. Japan needs to keep their money cheap because they are the big export country. Also because the Japanese Olympics is coming up. They definitely don't want to make their currency too expensive, because the point or the purpose of the Olympics is for people to travel to your country and consume and buy and shop. For US, they also don't want to change the interest rate at the moment, because we start to see that the job market is going a little bit soft. So they don't want they don't want to do anything too crazy right now. Same as Australian, same as New Zealand. The only two countries that might raise the interest rate. First is Canada. Now, Canada, believe it or not, the Canadian currency had been one of the strongest currencies since 2019. The Canadian economy has also been doing very, very well. And right now, since Canada, US, and Mexico had signed the trade agreement, so now they removed that biggest uncertainty. Everything is good right now for Canada, but we don't know what's going to happen in 2020, so they might just keep the interest rate as is. We know that they're going to change a central bankers in June, so that might change the policy a little bit. Another central bank that might change the interest rate will be UK. Now, UK, obviously, January will be the deadline of Brexit. So UK will be something that's very uncertain. So we will see the update following up. Okay. And so basically, as I mentioned, if you look at the equity market, all the major equity, this is an ETF from Vanguard, S&P, everything is still in a quite nice uptrend. This is a weekly chart dating from 2011, right? So dating from almost 9 years ago. As you can see, global equity. So because the US equity had been performing so well, that suck out all the money from the emerging market, also suck out the money from the developed market, such as Europe. So this is what happened basically, just to show you. Let's look at it. Walt Disney stocks, Starbucks. So this is just some of the major stocks that many of you have heard. Facebook, Alphabet, Google, Amazon, and now Netflix. So basically, as I mentioned, I don't make any prediction. But for me, I think that the market generally is going to be a status quo until the US election. That doesn't mean we're not going to have big events such as today, this kind of global event attack between US and Iran. Though these kind of global events will be something that completely out of anybody's predictions. So you just have to understand, if you ask me, you say, Enho, how can we prevent this kind of event? There's really nothing you can do, because if you don't want any risk, if you want a zero risk, don't trade. Put your money in a saving account, because the truth is, if you want to make money, you have to take risk. It's life. It's like everything else. If you want to have something better, you have to be willing to take risks. So there's no risk-free trade, unfortunately. So these kind of events, do I have anything that I'm able to predict or prevent? Not really. What you can do is to at least have a knowledge to understand what's going on, so you don't panic and just try to sell or buy. That's the best tool you can have, is knowledge. Because once you know what's driving the market, what's going on, what's the correlation, then you will be able to have more control with yourself, with your knowledge, and also with your own emotion. So there are certain trades that I still carry in from last year. And as many of you know, I am a swing trader. So a lot of trade I just carry through. Now, one thing about swing trader is that if a lot of people ask me, is it better to swing trade or day trade? The answer is really depend on your personality. I know that a lot of debate, people trying to say one is better than the other. I don't think so. I think I personally know a lot of successful swing traders. I also know a lot of great, fantastic day traders. So it's not about the strategy, because the strategy always have to fit your personality. If you trade a strategy from somebody else that is completely against your personality, doesn't matter how good that strategy is, you're not going to stick with it. If you're not going to stick with it, there's one thing that's also the biggest reason for traders or investors to fail, is inconsistency. If you change your strategy every day, if you change your asset every day, basically when you hear that your neighbor is making money with Facebook, you're like, oh my God, I need to buy Facebook. Well, you're buying at high, right? If you hear your other neighbors is making money with Bitcoin, you're like, oh man, I need to trade Bitcoin. If you're always chasing this kind of trend, unfortunately, you are not going to make money in any market, because it takes a lot of discipline and consistent approach to make money, right? This is not fashion. We are not trying to, switch up, trying to make a cool outfit, right? This is really a long-term game. So to answer your question, swing trade and day trade, they're both great. All right, it really depends on your personality, and also understand your personality will change throughout your life. So I personally know a lot of traders, or including myself. When I was much younger, I loved day trading. I loved to be in front of my computer. Now I'm a little bit older. I really don't like to be in front of my computer for 8 hours. I really don't like this kind of like minute by minute. It does not give me any thrill anymore. It gives me a lot of panic. I just feel like, oh my god, it's so tired to be staying in front of my computer. So again, it really depends on your personality, it depends on your lifestyle, and depends on where you are in your life. Okay, so again, like I said, it's fine to change and switch up as long as you know and you're aware of what you're doing. So last year, I carried this Aussie CAD trade for a very, very long time, and I almost got stopped out basically in December. But again, thanks to the war, the potential escalation between US and Iran right now, we have a very strong oil market, which helps the Canadian dollar a lot, and that's why we see a big drop in Aussie CAD at the moment. Okay, I don't know what's gonna happen. Nobody knows. Another trade I still carry through from last year is euro dollar. So euro dollar trade, I had placed this trade from last year. I never got filled only until the end of December. And again, thanks to the current situation, we have a strong dollar and very weak euro right now. Another trade I had that was winning from last year, but now we are back at the beginning, is New Zealand Swiss. Now again, this is a classic example of swing trade, because you might have a trade that you give yourself a big risk and reward ratio, and things might work out very well for you, and you're very tempting to profit, to take your profit, because this trade I got one-on-one, which is great, but you have to stick to your strategy. Because if you tweak here and tweak there, you're not really being consistent. So although you might see a lot of time, you will see a profit disappear, a paper profit or unrealized profit disappear in front of your eyes. That's the nature of it. Okay, if you cannot tolerate this kind of thing, then maybe swing trade is not for you. If you really just, oh man, I need to make money every week, then swing trade is not for you. Okay, because if you want to swing trade, it's very important to let your trade works out, and that means a lot of time you will make profit, almost hit your profit point, but then some big event like this, like today, happened, will switch and change the direction of the trade, and that's just something you have to be fine with it. So those are the few trades that I have right now and still carry through. Now I am very interested in British pound currently. As I mentioned that pound is going to have a very interesting month in January. And again, if you don't like this kind of uncertainty, do not trade British pound. Do it after the Brexit. But what I liked British pound is I think it still has a lot of upside potential. And my last trade got stopped out after the UK election last year. Now I like British pound is because, remember, right after the Brexit back in 2016, the Bank of England cut interest rate drastically because they want to prevent a big of economic shock. Also, people were dumping British pound because they think, oh my god, this is the end of the end of UK. And what happened is that UK was still quite resilient for the past 3 years, although we have a lot of political drama, but the country and the economy, it's not like recession, it's still okay. So what happened is people start realize that, okay, that was a panic sale. And now since we are going to have a very clear conclusion in 2020 between the UK and Europe, and right now, if we remove that uncertainty away, the focus is going to shift back to the fundamental. And the fundamental side is that because of the huge currency drop, the inflation pressure for the UK had been very, very high. So because of that, the central bank had hinted that they will need to raise the interest rate in order to curb or to limit it in inflation. That means because of that, they will raise interest rate, but because they will raise interest rate, they will actually make the British pound become more attractive. It's sort of like an interesting thing in this kind of economic cycle or correlations. So because they are going to raise interest rate, they will make British pound more attractive. And also because British pound is a very speculative currency. So a lot of people completely ignore the fundamental side. They just feel like because we might have a positive outcome for British pound, because pound had been largely oversold for the past 3 years. Let's take a look at the weekly chart for British pound. So you can see I have to actually go out here, and you see right at 20. Well, first of all, we have a big drop after the financial crisis. That's for sure for every other currency. But since 2012, British pound has been, this is a weekly chart by the way, has been a very, very steady uptrend all the way until the Brexit. It just dropped completely. Okay. So right now we are consolidating right here. So a lot of people think that British pound might go back to the pre-Brexit position or levels, which is at here. Okay, this is pound yen. So if that's the case, then yeah, there is still a lot of room for British pound to go up. And that's why I'm also very interested. Again, this is a very swing trade idea. Okay, it really have to take few fundamentals shift. I think Bank of England will have to raise interest rate. The Brexit definitely will have to finalize between the UK and Eurozone, and also UK will have to have a sort of sounding economic prospect, economic future. And I think they might be able to do it because right now the Conservative Party has such a big control, and they might just start making deal with other countries other than Euro. They might make deal with China, they might deal with US, right? So that will give UK become a very versatile country to do a lot of things. So if you look at the British pound and US dollar, you look at a cable, and it's the same picture. We have a big drop after the financial crisis, and then another big drop after the Brexit. And you can sort of see that 1.30 was sort of a bottom. You have this kind of double bottom patterns. So again, we might go back to the pre-Brexit level, which again is still a very, very long way to go. So I do think there's some good potential for British pound to keep going up. But that's just something some random idea I have right now. Other than that, I don't really have much for this week or even for the next week, right? Again, people just slowly go back to trading in the first 2 weeks of January. So if you don't feel comfortable, if this is your first time trading, I would suggest you to just sit on the sideline, still observe the market, because it's very interesting to see how the liquidity will change throughout the holiday and coming in with how the people going back to work. Again, you have to understand what's driving the currency market is not you, me, or anybody like a retail trader. It's the big institutional trader, and they will follow the bank hours. So that's why at the first 2 weeks of January or the last 2 weeks of December, these 4 weeks will be very, very quiet in the market. And that's why I personally don't trade in this kind of environment. All right, next week, quickly take a look. We do still have the Chinese data coming out, a few PMI data from Eurozone, and non-manufactured PMI from US. This is not important. The ISM manufacturing PMI is more important for the US. Building approval. Next week we will have non-farm payroll. So that will be the biggest thing for next week. US employment data and Canadian employment data. But as I mentioned, right now what's driving the market is the current tension between Iran and US. So watch out for that. That's going to drive the oil price. That's going to drive the gold price and Japanese yen, US dollar, and Swiss franc. And that's also going to be quite negative for the equity market, for the stock market. So if you take a look at the stock market today, I'm pretty sure it's going to be red. Let's see if it's coming out. Well, I mean, we are still trading, right? There's still an hour and a half before the U.S. stock market close. But I'm just trying to show you the stock market in Europe and Asia because they closed already. All right. So today, so for Asian, we do have a little bit risk of sentiment. Europe is actually mixed. So not, oh shit, sorry about it. It's all right. Europe is actually mixed. US so far is red across the board. So again, it's not a good environment for the stock market for today. All right. So that's it for the first video of 2020. And again, I hope this is going to be a fantastic year for you, for me, and for everybody. If you decide to learn trading, doesn't matter what you want to learn, Forex, stocks, you have any question, feel free to let me know. I am a microeconomic trader, so I do look at the big market, and that's why the knowledge is all applicable whatever you trade, okay? Because the big environment is always very, very important. All right, thanks for watching. I'll see you next week. Any question, feel free to contact me. Thank you. Bye-bye.